What up? What up?
Glorious Monday, y'all.
Another glorious Monday. The market is closed, but
Guess who's open?
Market Mondays is open.
We're back. We're back. Hopefully,
Yeah,
everybody had a safe weekend.
absolutely.
Shout out to what city? The city of Atlanta.
Shout out to the ATL. Shout out to my boy DJ Envy Carcella. Was an amazing event. Dope. That I'm glad we got a chance to take part of it. And shout out to all of our friends in Atlanta that brought their cars through. Shout out to him 500. Shout out to Zoe. Shout out to Goose. Shout out to Alex. Shout out to Skittles, Miss Skittles. Shout out to Nehemiah Davis. Shout out to Pushman Mitch.
Said Josh.
Shout out to Joshua Chris. Am I forgetting anybody?
Gooch.
I said Gooch.
Oh, shout out.
You said Gooch, yeah.
Mitch.
Yeah.
Oh, you just said Mitch. Yeah, man.
So
We
yeah,
had
they I think we had the, humbly speaking, I think we had the best section. All those guys, they had all kinds of cars, man. Rolls Royces, Bentleys,
Lambos,
McLaren, Lamborghinis, you name it, man. Atlanta, I understand why they call it the Black Hollywood.
Yeah, you know what made it really dope is that a lot of the other cars, no disrespect to them, they were roped off, so you just got to look at them. But our good friends are so generous enough that the people actually got to touch them, look inside, sit inside, and stunt for a little bit. So it was dope to see all the people come out with their families. It was like a really family-filled event. They had like kids rides on the side. My family was there. So it was dope, man. Shout out to Envy again for putting that together. And shout out to his whole team. I know his wife and his daughter was involved. Shout out to June. He was out there holding it down.
Shout out to Matt. He was out
MG,
there.
yeah. Shout out to MG and his fam.
And shout out to everybody that worked the merch table for us. Bam, the whole crew.
The Felton family.
Yeah.
Y'all had it moving.
yeah. Barnett family, what up? Felton family, what up? Appreciate y'all.
Shout out to everybody that brought some merch. So once again, man, that was a dope event. Glad that we got a chance to take part of it, and looking forward to the next one for sure.
Yeah.
That display y'all had was amazing too. I called you, shot like, yo, I don't
Wasn't
cheap. So
we was up to like 2 o'clock in the morning setting it up. So doing
that's
some
great branding.
Yeah, I appreciate it. So interior decorating.
We
made it work.
We definitely was in there at 2 a.m.
We made it work.
Driving cars throughout the city. It was a whole thing, but whatever it takes to get it done, man. Whatever it takes.
That's it, man. All right. So yeah, as I said, the market is closed, but we're here. So we're gonna give you guys information as always. So hopefully you can go out and execute it while you're in the middle of your barbecues. But before we start, gotta give you the rundown. Big week for Earn Your Leisure tomorrow. Shaq,
the Diesel,
the legendary
Aristotle.
Yes, the legendary Shaquille O'Neal. I don't really need to have an introduction.
Right.
One of the best basketball players of all time, but also one of the greatest entrepreneurs of our generation, and one of the best marketers of our generation as well. So we got a chance to chop it up with him at the Circle of CEOs event. Shout out to those guys. And we sat down with him and had a great conversation about business, marketing, the NBA, Kobe Bryant, Notorious B.I.G.
What else we had?
Halle Berry.
We had a little banter.
Yeah. He was everything.
Great.
Yeah. So shout out to Shaq, man. A great dude. Super solid. And I'm looking
Halle
forward.
Berry though?
Yeah.
We'll tell you that story.
Yeah, that was one of them. That was one of them stories, man.
Halle Berry.
Shaq A1, man. A1.
Shaq's a funny dude, man. So yeah, that comes out tomorrow, 8:00 Eastern Standard Time on YouTube and all podcast outlets. Make sure you check that out. And also check out all the other shows that's coming out this week. Rants and Gems podcast, Inner Wealth podcast, my boy Ash Cash, and then forgetting anybody?
Dave Shans,
yeah.
Hey, did you see his latest guest? None other.
Oh yeah. Dame. Shout out to Dame.
Dame cooking.
We connected the dots for him on that. And Dame, good dude, obliged. So shout out to Dame, man, good guy. So that's the
and Dream Nation on Friday.
Dream Nation, shout out to Dream Nation. So that's the rundown for what we got going on this week at Earn Your Leisure.
Yeah, with our class. Don't forget the class. We got class this Wednesday.
Oh yes.
Virtual assistant. Let's do that.
Virtual assistant class.
Yeah.
And that's going to be dope because if you're in business, you understand that, hiring help is extremely important, and having a virtual assistant is something that you can cut costs and work a lot more. So, EYL University, biggest business school online. So
That's a
if you're
fact.
interested, sign up. Go
Yeah.
to eyuniversity.com. And shout out to Tiffany Cross,
Ah,
MSNBC, the
that
whole
was a-
team, the whole
that was a
production
look.
team. Yeah, they was gracious enough to have us on their show over the weekend. And MSNBC, that's my mom's favorite
Yeah, that's
channel.
crazy. That's my parents' favorite channel
Yeah,
too.
Amazing.
she watches that all the time. So
Well,
she
my-
was telling me about Tiffany Cross even before we got on the show, because she likes her show. So, it was dope that we got a chance to.
Did they text? Did your mom text you?
Well, I told her.
Yeah, I'm saying.
Oh no, yeah, they told
My mom-
yeah.
My
so-
mom
I'm
gave me
so
the.
proud of you.
She gave me the thumbs
Yeah.
up. Very proud.
Yeah. And it was crazy. It was working. I didn't even plan on it, but we got a chance to talk about Market Mondays on there. That was the first question.
Yeah.
She was like, "Is real estate the only way to build wealth?" And I'm like, "Actually, it's funny you
Great
say
segue.
that."
Y'all segues fire.
Great question. Great question.
Yeah. So shout out to Tiffany.
Yeah, you might have heard the 300 jump shot thing in there too. Shout out to my brother Ian.
Yeah. So yeah, shout out to the good folks at MSNBC.
Yeah. And real quick for all the earners, I know y'all in here. Shout out to all the earners. You have the Real Estate Club on Tuesday. You have Wall Street Club on Tuesday. Breaking Bread on Thursday. And don't forget the world-renowned #1 in the business Crypto Club this Friday. So shout out to my brother Alistair,
Shout out to
who's
Alistair.
heading that. And we got the book club Sunday. It's a every week is fully packed, man. It's the #1 place for education in the world, man. Bar none. So shout out to all the earners.
You want to say the
Yeah.
sponsor?
So let's give it some love to our good people at Ally. So this episode of Market Mondays is brought to you by Ally Financial. Ally is an option if you're looking to bank or invest. Ally Financial is a leading digital financial service company with passionate customer service and innovative financial solutions. They are relentlessly focused on doing it right and being a trusted financial service provider to both customers and communities. Get with Ally to make the most of your money so you can save, invest, and spend on the things that matter to you. Shout out to the good folks at Ally. That's our good people. And shout out to everybody at United Masters as well.
Yeah, shout out to them. Ian, the floor is yours.
Make some magic.
Let's do it.
Let me know if you can see screen.
Yeah, you good on our side?
Yeah, you good.
All right, bet. All right, before we get started, Xander wants to say hi to everybody.
Hi, everybody.
Anything you want to say? Red means what? Green means what? Good job, baby. So tonight I'm going to cover here's how to know the most dominant stocks that hedge funds are buying at this moment. But before that, the disclaimer: do not copy, remix, reproduce any material without my written permission. Any attempt to do so will be presented with legal action. Please don't do so. The material shared here tonight are strategies and creations of mine or the good fellas at EYL. Do not copy, remix, please. I'm begging you. Love you guys. Let's go. Go subscribe to my YouTube. Just type in Ian Dunlap, subscribe. Next week I have a super big announcement. I was going to do it this week, but I'm gonna wait. And then if you go to joinredpanda.com, those are the two places where you will be able to get exclusive content from me. If you want to join the stock club, if you want the greatest entries and picks on the planet, please join and do so tonight. So you get the best 4 stocks for your retirement, the best places to get into the market called out by me. You'll get additional entries from the algorithm Athena, the best growth stocks to invest in, the 2 best places where to get into the market, 28 bonus picks on the year, and a 10-minute daily call. We'll have our stock club call tonight. And also for those of you that join tonight, you will get access to the futures trading program and free access to be able to enter the trading room to trade with us on Fridays. That is only for those of you that join tonight. So if you want to know how to long-term invest with the stock club and get the futures program and the trading room, click the link. The guys will put the link in YouTube and you guys can join tonight and you'll have access and be able to join us Friday. Stock club call will happen after tonight at 9 p.m. Central for Red Panda Stock Club members only. So here's how to uncover institutional ownership by using this secret little part of wallmine.com that I don't see too many people talking about. So if you go here to tools and then you go to stock screener, what most people are usually looking at is the data over here. Click on this button to see ownership. So if you have something in your portfolio and you want to see how many institutions own it, which they are the market makers, you want to be able to look. So if you can look and see here with Apple, we can see that there's 60% institutional ownership. Good sign. Usually 55% and above is amazing. You don't want 100% institutional ownership, but 55 and above is great. Microsoft, 72% ownership is great. So what that is telling you is that municipalities, big hedge funds, prop firms believe if I put my money here, this will be safe. Therefore, as a retail investor, if these companies are doing that for safety, you will be able to have safety on your own as well. If you look at Facebook, you can see that there's 80% ownership. Yes, my love.
Up.
Yes.
Green means up.
Yes.
And red means down.
Okay,
Don't forget.
so if we look at this one right here, LVMUY, you can see the small ownership. Also, if you hit this drop down button here, you can see something that's very interesting. The ones that are 100% institutional ownership, I don't like those. And then you can also see which ones have no institutional ownership. So let's take company ERA and let's look at the chart. And if we look at this chart right here, we can see this 5 years worth of data had an explosive move here, 2019, and then it slid down. I don't like companies that have this volatile kind of move. If the stock is not consistently trending to the upside, I don't love it. And let's go look at all. So you can see that it had this previous high in 2014. For those of you that are into support and resistance, into technicals, you can see the previous high was up here 34.19. When it had the spike, 34.19, broke a little bit above it and came back down. Now, for those of you that would trade something like this, right? We talked about it before. If the previous high had never been touched and is not being broken, if you're going to trade it, you should exit at the previous high if it isn't a good company. Please write it in chat.
That is a super gem.
Exit at the previous high if it is not a good company, if you are only going to. And let's look at another one here, HUD. And let's look at all. We can see the same thing. Previous high was in 2011. This is not a good investment. Great. And we've been slowly sliding down, and you can see there's a correlation between the upward or downward movement of a stock in comparison to the institutional ownership that it does have. So like if we go look at Facebook, we can see here the Facebook's been growing. This is the yearly open we talked about before with that pink line. The yearly open, they opened at 274.78. They're at 354.70 as of this recording. Upward movement because there's safety there. Please put in chat, I'm going to invest my money into safe companies that will give me a return. And since the NCAA uplifted is ruling, college athletes, I want to tell you, Red Panda wants to sponsor you this season. So if you're a top athlete in basketball, football, or soccer, please email me at ian@joinredpanda.com. And I would love to help you and sponsor you, and not only sponsor you, but to put you in the stock club for free if you are a sponsor athlete, so I can make sure if you make it to a higher playing level that you will never be taken advantage of. Now, this is the real underlying reason why most people don't become rich from investing, even though they say they want to be. And don't worry, to the person who sent this, I won't put out the entire segment, but I was having a interesting dialogue and got a great email, and this is why it's important for you to read Money Master the Game and Market Wizards, because the underlying reason why a lot of people don't get to where they want to be in investing and trading is because of the other things, the subconscious or internal conflicts that we face. So in chapter 5, Tony Robbins is going over a section where he's talking about how people say that they want money, but what they really want to fulfill is a need or desire emotionally that has not been met. How many of you know it's right to invest every month, but for some reason it hasn't connected, or you have not done it yet? Or in a trade, you know you should exit probably at 12 ticks in a move, and you can probably make $2,500 or $5,000 on that trade, but you have emotional circumstances, maybe a fight with a significant other, things are not going well in terms of health, either yours or with a family member, and other things are blocking you. I'm telling you, you have to clear out some of those blockages first, because often we don't feel like we're worthy enough to become wealthy and or rich in this pursuit, because what we really want is respect, admiration, love, security, We want happiness. We want friendship. We want relationship. We want to be close to someone that we love. So let's take a moment to breathe and let that sink in. And I need you to write down in chat, what is the emotional need that you have not healed yet, that you must uncover and fix before wealth and riches will be able to manifest into your life. You have it. This was an amazing clip. This guy said, without the title of father, dad, great employee, great friend, who am I? And often we don't know who we are when those titles are stripped away. So I want to ask you guys a question. When that is stripped away, who are you actually? Because sometimes we get so wrapped up in just being great dads, great people, great business people, we actually forget who we are as actual people when those titles are removed away. And once we know that, we're able to execute a hell of a lot better in other areas of our lives, so we're able to manifest the dreams that we really want to come true. Western society has made us think of ourselves as these titles, but we're people outside of those individual entities, and we have to remember that as we are on this journey of investing. Let's take a moment to let that breathe and let it sink in. The question I have to ask you is, when you strip all of those roles away, who are you for yourself? And if you do not know, you have to go back to a childlike state and ask yourself, what did you like to do as a kid? What were your dreams? And what did you aspire to do in those moments? Because often, as stated, we get wrapped into the title of being father, parent, husband, son, daughter, nephew, niece, grandchild. But that does not really state or accurately describe who you are as a person. On this journey, and the reason I'm saying this is because I don't want you to have a false illusion that once you get to the amount of money that you want to make and or earn, that all of a sudden all of life will be great. For those of you that have hit some of your annual income goals, did you not at the end of it feel like, damn, is this it? There's always this debate of if money buys happiness. Money will not give you purpose, it will not give you completion, it will take away some stressors. But until you identify what you need in order to be happy, and humans are happiest when they are making progress towards the goals they set out for themselves. Until you identify that, you will always be on a roller coaster of trying to find joy, which is different from happiness and or peace. Next week, I'm going to walk you through to how to use the Buffett indicator to know when a potential reversal in the market is going to happen. I know Burry and a few others are telling you that a crash is going to come, and we are going to have a dramatic pullback. Once again, recessions, pullbacks, drops are tremendous opportunities for those of us that are looking to be long-term investors. If you are not, it is the best time to get into the market if you have not executed. But the thing that you need to do and need to focus on is the number of shares that you hold. Long-term matters more than anything. For example, Microsoft all-time return. And I know long-term investing is not deemed to be sexy. All-time return, 277,500% return. Let me ask you, have you in your business, in any trade, any endeavor, gotten a 277,000% return on investment? Stock Club members, don't worry. I'm not going to give away the big secret that I gave away last week. But the longer you hold, the more money you stand to make once you put your money into a dominant company. That's the entire game. But guess what? Those that are at the top know that most people don't have the discipline to hold, to let this happen, because of the decisions that are made every single day and what are you intaking. So after this juice fast, there's a lot of clarity that I've had. And I've always said, ever since I cord cut in 2012, I don't have cravings because I'm not looking at Hardee's, McDonald's commercials, etc., Pizza Hut commercials, right? So, but that is a mechanism. Sales are a mechanism to take money out of your pockets and put them into the families of others. Who in here would love a 277% return? And I'll say this. Just because I'm telling you to hold for the long term does not mean that you can't peel off profit in the interim. Can I be honest with y'all? When I see that y'all don't want to hold long term, if I'm looking at you as a competitor, I'm looking at you like it's so easy to bust your ass in investing. Because if you cannot hold for a 2-year period, a 4-year period, you're saying to yourself, your ancestors, right? You're saying to your family that you don't deserve to be free because I want to live in the now. That's the entire game. Can you hold an asset for a long period of time? And there's ways that you can take profit, reinvest the profit, make the money back. It's not an all or nothing proposition. But anytime I say, oh, I want to hold for a year, that's not fun, I can't flip fast enough, and my eyes as a competitor, I'm like, great. It's easy to put up 96 points on you. You don't want to play any defense. Great. Here are the 4 reasons that I love Shopify and why they are one of the most dominant stocks for this decade. Number 1, I've already said it, Shopify is the new eBay for anybody that used eBay back in the day, and their executive team has done a better job at making their ecosystem a little bit better. But originally, the partnership that they had with PayPal was great because that will allow you to fulfill on the financial side if you have to pay or as a seller, right? But the experience was not the best. Shopify experience is amazing if you're on the business side of it. It's amazing for the customer, and I think that they are going to be the eBay of this era for the next 20 years. Number 2, it is in the top 15 of all stocks. In all stocks, not US stocks, of all stocks. They're a Canadian company and probably the most dominant company in Canada. The trailing 12 month is $3.5 billion. It's up 99.6%. So for a company for that size to make 3.5 and to be up 99.6 is amazing. Yes, it was because of COVID, but there are not many companies that had great traction beforehand and they're doing well after the fact. And then Shopify is up 5,056% all time. Over the next 10 years, I'm extrapolating and thinking that it could push up to 9,000% return since its IPO. And they're better than their competitors. So if you look at Wix, WooCommerce, any of the competitors that they have in the e-commerce space, they're a lot more user-friendly, easier to use. I'm telling you, Shopify is going to be one of the most dominant companies for the next 10 years. Next week, I'm going to give you guys a breakdown with one of the Red Panda Stock Club members, how he was able to take 27 grand and turn it into 100,000. Long-term investing only, right? No trades, no options, nothing, just long-term, which is 370% return. But one of the key lessons I can give you that you need to do today, you need to have a separate account for long-term investing. Once you put the money in there, do not look at it for 3 months. Your long-term investment portfolio is not meant to be looked at. One of the major advantages that angels and venture capitalists have is that you have certain lockup periods. So if you look at what Tim Ferriss was able to do in that era when Gary Vee was investing in Facebook and he missed out on Uber, but he invested in some great companies. The lockup period for 5 years, it goes back to that 5-year equation again, right, is a thing of safety. If you have access to your capital and you can trade in and out of it, who does that benefit? That does not benefit you. That benefits others. That benefits the brokers. Put in chat, a 5-year lockup period is the ideal time to grow wealth. Here are the top 5 holdings of the Dow. Last week we talked about the S&P 500 and you're going to see a lot of correlations. But during any era you can look, the Dow, number 1, Apple, my baby. Thank you for all the great returns. I love you dearly. Microsoft, hey baby, you looking good. I love you. Microsoft is number 2. Number 3 is a sleeper, Visa. So I would say Visa is light fintech. When we talked about it, you compare the top 2 in their industry together and make your own micro ETF. So you compare Visa and Microsoft together, right? Kudos to my buddy Dave. I was telling Dave about Visa a few years ago and look how it's taken off. Matter of fact, let's go look at Visa's chart real quick. So if we look in 2016, it was at $75. Now, let me ask you a question. On your debit card or credit card, do you have at least one card with Visa on it? If so, put Visa in chat. And let's go look at the commentary. Had a tremendous run up. And look at all these green candles. This is forward momentum. So out of these 5 years, 1, 2, 3, 4 months have been bad. Let's count COVID and the recovery time. So if we take out COVID and what happened as a result, they've only had one bad month out of 60. Now let's go look at 10. So if we go prior to this, zoom in here, and this is when I do my analysis, what I'm looking for. So 1, 2, 3, 4, 5, 6, 7, 8. And so let's take out the 3 months for COVID. Only 5 months in which things were not great out of 10 years. Now, ladies, for those of you that have relationships or a husband, if out of 10 years, your husband only misbehaved in minor infractions, right? 5 times, how great would you be to him? I don't want a stock that is going to be volatile and going up and down all the time. This illustrates why. And then look at the price. 2011, the stock was at 19. It's at 238.63 now. The all-time high is 238.78. It'll break that and probably push to 251 within 14 months. Number 4 is JP Morgan, run by the legendary Jamie Dimon. And then, of course, Johnson & Johnson. Here are the top 5 holdings of NASDAQ. Number 1, Apple. Number 2, Microsoft. So anytime you see these indexes have the top 2 in their funds, once again, it is for safety, right? But a lot of times you guys hear safe and think small return, 6%, 5%. Put in chat, what has been the return of Microsoft and Apple this year? And I told you they would kick ass like this year, did I not? Number 3, Amazon. Number 4, Alphabet, which is Google, and then Tesla. So when you start to see the big boys are all buying the same things, that is for a reason. Please put this in chat. Only destroyers of capital choose to gamble on bad companies. Yes, it's exciting as hell. Oh, I'll find a company in China that's like the 5th best version of Tesla. And guess what? To the ground, no to the moon action. Your money is set on fire. When you see that these top hedge funds and these indexes and mutual funds are anchoring the success of their company or that fund to these companies, why should you not do the same thing? And I want to say this, weekly and daily news does not matter. Go look in 2014 what people were saying about Apple, Microsoft, Tesla. I always refer you to the YouTube video when Kathy was on CNBC. Kudos to the good people at CNBC. Hi Mary, hi Josh, hi Bonowin, right? Hi Kate. They laughed her offset almost when they said Tesla was building a great base and was going to take off. The only horizon that matters is year to year. And that's in a short term. I'm always looking at 5 years because 5 years, 60 months would give me everything that I need to know on any business, any person, any basketball player, any company. The 5 year has to be your compass. Daily and weekly news does not matter when you're investing. And I'm going to say it again. 2 indexes, 2 tech is the easiest way to invest. If you don't use it, you do not want to be rich. And let's go to BlackRock, which I'm going to start calling the ruler of the universe. Right? So, recently, Blackstone bet $6 billion on shifting path to suburban homes. And they've gotten some attacks on if they are destroying the ecosystem. They are the market maker right now in housing. And I always told you, the 3 pillars of the holy trinity of investing is business, stocks, real estate. So the private equity firm buys a company with more than 17,000 houses, right? So it's a great investment. And I can make the argument that more municipalities should make more room for more development so there would not be a lockage or a shortage of houses at fair prices right now, but that's another conversation. The thing that I want to bring you to, write this down. You need to look at the top 5 hedge funds and the top 5 private equity firms to see what they're investing in, to see what you are investing in the safe. So if you look at the top 5 hedge funds and the top 5 private equity, if they are not investing in what you're looking to in the public market, publicly traded market, there's a great chance that what you're investing in is not safe. So let's take an example. Over here, you can see the number of shares that BlackRock has invested in these companies. You want to look at your portfolio and see if there's any correlation. Let's run through what BlackRock is invested in. Apple, Microsoft, Amazon. There's a correlation between NASDAQ and Dow here, right? Facebook, Alphabet, Tesla, Johnson & Johnson, JP Morgan, Berkshire Hathaway, Visa. So if the Dow has them, the S&P has them, BlackRock has them, do you not think that there's a correlation between safety? And look how many shares they have in Apple, 1.06 billion. Do you think that's only going to move 3% if they're putting $1 billion anyway? Okay, right? That's not the case. Then MasterCard, Nvidia, Procter & Gamble, Home Depot. For all of you in construction, I've been saying you have to invest in Home Depot or Lowe's, which is their competitor. Disney, Intel, PayPal, Bank of America, Alibaba, right? And then you go to the bottom, Netflix. Great company. 28.81 million shares. That is an indication they don't believe that they have a competitive advantage anymore in comparison to Disney, which is a combination of physical location and online streaming, which is 116 million shares that they have in that fund. Let's go to what else they're invested in. Cisco, Comcast, Abbott Labs, ExxonMobil, but Netflix we talked about, of course. Broadcom, 27.2 million shares. Not a lot of belief, right? Citigroup, 160 million shares. And if we scroll up here, we can see Exxon, 282 million, Cisco, Tech, 334. Now your homework is to go through this list and see, are the most shares in technology companies or other asset classes? Look at Salesforce, 65 million, right? Thermo Fisher, 29 million. Nextera, 151. So what you want to see, since they are one of the most dominant investment forces out right now, you want to know, is your portfolio safe if BlackRock, which is a proverbial market maker, them and Vanguard, if they are investing in these asset classes? If not, you probably need to reallocate. You need to hold stocks for at least one generation if you truly want generational wealth. I'm going to tell you this, and if this is a statement that is undervalued, because this holding period is really the cheat code. That's all I'll say, but I'm going to say it again. This holding period is really the cheat code. I'll leave it there. The three ideal amounts that you need to invest in the market if you're a business owner, athlete, or entrepreneur is 10,000, 20,000, or 100. For those of you who may say in the comments, we don't have that kind of money. Invest 100, 200, or 1,000. But for athletes, entrepreneurs, and entertainers, you need to invest 10 grand, 20 grand, 100 grand into the market every single month, so you can have security on the back half of your career. Time in the market plus being able to time the market as I can is the blueprint to freedom. Once you know what a great asset is, you can get it at a better price than most people. And let's just say over the course of your investing career, you get in at a 4% better price than most people, and that only happens 12 times. Does that 48% not make a difference in your account in comparison to someone else? And that does not even factor in the compound interest on the back end. Time in the market plus being able to time the market is a blueprint to freedom. A lot of you have been asking me about these penny stocks, so I want to go through them. I'll tell you if they're good or they're bad, but there are reasons that most of these stocks that are pennies are low value or cheap as hell. That's because they have not went up over time. Now, it's different if they IPO at a low price, and let's say they IPO at 15 bucks, and there's a solid business. But if a company's been out for 8, 9, 10, 15 years and they're hovering around 5 to 15 bucks, it's usually no good. But let's go look at the chart. So the first one is ticker symbol OCGN. The high was at $268.20 in 2016. It is now at $7.29. Not a good candidate. But let's go out. If I go out 10 years, the previous high was 778 bucks and is at 729. Does this look like a good candidate to be a good long-term investment? But when I want to make absolute sure, and look at this, it's also underneath this 200-day moving average. I want stocks that are constantly above the 200 not dancing and staying below. So this is the maximum data allowed on it. Downside is no good. ENF will be the next one. Let's look at it. I'm pulling up. Let's look at GSAT. The previous high was $17.68. It got to a low of 15. These are good trades. So if a stock on a long-term chart is hovering below the 200-day moving average, it's a good trade. I don't think that Global Star could go from 96 cents and then jump up to $5. Yes, baby. Okay, then get another one until I finish, okay? Yes, thank you. Let's look at ASX. Now this one is hovering above the 200-day moving average. It's not in a price that I absolutely love, but we can say here, these ranges here, the top 747 and $8 are usually the high. You don't want to buy what the previous highs were, but this one is above the 200. There is some upward movement. It's just not an incredibly strong company throughout history. Let's look at CX. $41.96 was the high. It fell down, came to the 20 here a few years later, but the 200, but it's having a hard time staying above. If it's not constantly above the 200-day moving average, I don't like it. It's a good trade, not a good long-term investment. Let's look at ZOM. Same thing. Staying below the 200, it broke through, it came back down because of hype. It's probably going to go back to what the yearly open was at 25 cents. And here's a good way to know if a company is good. Go ask a random person in the street or a Target, Walgreens, and ask them, hey, have you heard of Zomedica? Have you heard of this ocean liner company? We go to Naked, right? Some people may have heard of it, but if you're looking at it in aggregate, if you ask 10 people, most people aren't going to be able to tell you anything good about it. Now you can see what these correlations are. If I wanted to trade this, I would see what the previous high is, and then you can see when they're broken. 674 is a previous high. If you want to gamble, which this would be, you could then probably buy some at $1 or $2, and then hope that it will go back up to $600 based on some insider activity or someone hyping a stock. But I don't think that's a reliable strategy. I don't like Naked for a long-term investment. IDEX is the same. Let's go through these kind of. Let's look at CTV. And when you look at a long-term view, it tells a true story. Please write this in chat. Take your emotions out of the investment. So this one, for Cable TV International. I've never heard of this. Put in chat. Have you heard of this? Well, all the competitors. So I'm thinking, if I'm comparing this versus Netflix, Hulu, Disney Plus, HBO Max, even what I use, IOML TV, which is not publicly traded, YouTube, are they better than? No. And it's reflected in the price. And at one point, the stock went to zero and was flat. So what's been happening since people have missed out on tremendous gains, and they are chasing things with low value and getting a group of people to pump them up. I'm not mad at it, but it's not a good long-term investment. In UUU is a ticker, same thing. The all-time high was $4.50. No. SGMD, same. Can you guys see the same correlation? These popped around IPO, and then Sugarmade Inc. Who put in chat if you heard of Sugarmade before? But when you're looking at a long-term horizon, this tells a true story. That's why weekly news doesn't matter. I'm sure 2 weeks ago somebody probably said this could break out, but if there's no pre-existing evidence for it to bounce, I'm not going to buy it on the hype. Let's look at SPI. Same thing. You're going to see the same correlation, and this is your homework. Go look at 500 penny stocks and look at the since inception chart. You will be able to see the correlations between the ones that are good and that are bad. IVR. And Mortgage Capital Incorporated, right? It was great for a while. Then when it started to fall apart and we had a hard push down, what's the probability of this going from 370 back up to $15? We want things to be above that 200-day moving average before we're able to consider it. And then I'll run through these other ones. MRIN. Marin Software, haven't heard of them. DISCA. Now this one is interesting. Discovery Inc. We've heard of it. Broke up above the 200-day moving average. It's come back down. So if I'm looking for a place to get in, I would get in either at this yearly open mark or where the 200-day moving average is. In aggregate, there's 1,000 other companies, 500 other companies that I can invest in that would be better. But if I were to invest into this one, I would probably put my profit at this previous high at 55.42, get in at this yearly open or at this 200-day moving average, but I don't love it long term. Let's look at OPTT. Same, it was at 4,000. Ocean Power Technologies, and once it started to go down in 2008, it did not break above the 200-day moving average. It is not a good investment long term. Quick tip: if it takes you longer than 2 minutes to do your analysis on a stock, the way that you view a stock is too complicated, or you don't know what you're doing yet. Healthier Choices Management had a great run because of everyone was chasing gains. No, the move here is over. And the last one, let's look at HNBL. Same thing. Out of any of these, Discovery was probably, although it's not a penny stock technically, was the safest of all, but you saw the same patterns. They either are going to jump up a lot and then slide down, or they're going to have a big pop at IPO and then hover down for years underneath that 200-day moving average. Not good investments. And even if you're trying to flip, you still want to have a chance to make money. You don't want to hope. These are not good companies to invest in, even if you're looking to swing for half of a year. These are good trades that are going to last you from 1 day to maybe 5 days, and then you'll be done. These are the most oversold stocks in the S&P 500. And just because that they're oversold or deemed to be overvalued does not mean that they're good, but you can put them on your watch list. So you can come to tradingview.com. You can click on oversold and it'll give you a list, right? So usually I will go through and see, have these been going up, but maybe they had a hard drop or maybe they had a bad earnings, right? So let's take BTAI. So you can see end of year here. It went to the 200-day moving average, shot up like crazy. Middle of the year, July, started to come down, and then now we've been pressing down very hard. But there is not enough evidence behind BioXcel Therapeutics in order for it to be a long-term investment. It would be a good trade, nothing more, nothing less. So I will scan this list and go through and see which ones are oversold, and then I will go look and see which ones are doing well. And then those would be the ones I would consider investing in if I'm looking for an edge. And also here, you can also go to top gainers. You can go to most active. And then you can also go to the ones that are most overbought. And you're going to see the ratings here. And these will tell you if they're a buy or a strong buy. Okay. You can see Apple once again, strong buy. Accenture, strong buy. Adobe is a buy. And then you can filter through the ones that are good once you do your analysis based on them. And these are the 10 stocks that insiders are buying the most. And it doesn't mean that these are great stocks just because, but you can go to insidemonitor.com. You can go to the top 10 insider buys of the week. And if we go to page 1, we can see here CXM is one. And then you can also see at what price and then what the value. So the site is Inside-Monitor. We talked about it 2 weeks ago. And then you can look and see what people are buying that have a considerable amount of capital that you may want to invest in. And then also too, you can click real time to be able to see. So Dustin, that used to be at Facebook, of course, Asana, added there. First Merchants, FRME, Source Capital, and then you can use the site to see what people are buying, which could potentially give you an edge. And lastly, this is the secret investment hack that I never talked about, even in Stock Club, to know if your investment is safe. So anytime I make a long-term investment, if I'm going to hold it for a 10-year period, I'll go through my analysis. I'll look at the 5-year month, right? And I'll say, okay, great. Is this company dominant in this space? Are they better than all the other competitors? Great. How much of a hedge or a shield do they have? A moat do they have for a 10-year period? After that, this is what I do. I go and see for all the funds that Vanguard has and the ones that BlackRock has, are they in majority of their funds? Because in order for an investment to work, you need a whale or a market maker to make it work for you, right? So I know if the value of that stock is going to stay high, if they are in favor with Wall Street and the predominant funds have them, I have a greater chance for Apple and Microsoft to be safe. Also, when you're doing your back testing, please write this down. It's a super gem. When you're going back and looking at 10 years and 20 years to see if it's safe, you need to go see who was the predominant hedge fund at that time. So in 2008, Goldman had more influence. So you need to go look and see, were these stocks in favor with Goldman? So you may look from 2008 back to 1998 to see what were the top holdings of Goldman Sachs and compare that with the growth of that stock. Because if they have government influence and connections and they are heavily invested because they want their shares to go up, it is a safety net for me at this time, being Vanguard and BlackRock are two of the most dominant investment firms out right now. If they are not in majority of their funds, I won't touch it. That's the secret. In every market, there is a market maker, rainmaker, shot caller, however you want to frame it, that is going to invest a significant amount of money into that business. I want to make sure that Buffett, Vanguard, BlackRock, the top traders and top investors in the world are putting their money there as well. That way I'll never have to wake up and worry if Apple is going to go out of business or if they're going to have a 25 or 30% drop. For those of you that are investing veterans, you remember what it was like in 2006 and 7 and 8 when Apple was not that favorable amongst Wall Street and Steve was deemed to be too volatile or too much of a creative to run a business. That's why Tim running the business is more favorable for Wall Street. And like I said, I can argue that he would be the Steve Jobs of operations. And Tesla needs a character such as Tim Cook to help round out some of his eccentric, how do you say it? Eccentricness. I don't know. I messed up. You can kill me in the comments. His unique nature, right? To round that out, to make the company look more stable and more viable as a long-term asset class. That's why when he went on Rogan and smoked weed, got killed. The SNL thing wasn't the best, the pumping of Doge and Bitcoin. It makes him look very erratic and not tethered to what the actual mission is. But anytime I'm going to make a considerable long-term investment, I am looking to see what the dominant institutions, going back to the top 2 players in a space, correlation, and I'm going to look there and see what they are doing and if they're investing in those as well. And some of you have been asking me, what is the psychology of a short-term investor / trader? And I'll cover this in full next week, but the one thing I want to stress to you, you have to make the decision, and we talked about a couple of weeks ago, like what is the income goal that you want to have for your family in aggregate. So let's take 10 generations, and then let's take your lifetime income goal. I'm gonna be real. Most of you don't take trading serious because the way that you've been trained in a job, the sacrifices that you have to make to be great at something is different when you're being an entrepreneur. And that's why I always tell entrepreneurs, you're not guaranteed to make any revenue because you started a business. No one has any reason to support you, right? Even if they like you. We've seen a lot of people on Instagram turn into business people and not get the support they thought, even if they may have 1 million followers. The first thing you have to know is the income goal that you're looking to hit. And then whatever that goal is, the discipline then has to match. That's why when a lot of you were saying, hey, sniper program, first thing, check in every day, 7:20. I want to see who's not going to check in. Guess what? The people that checked in at 7:20 every morning on time, they're doing well. The ones who would check in at 3, they're not doing well. Discipline. Even on a juice fast, there are certain moments of clarity that you will have by doing it. And people was asking, why was I doing it? I'm like, for health, spiritual reasons, but also to push myself. Like, some of you say I can never do that. I'm like, do you think you'll actually be able to make $5 million in a year if you can't give up eating for 7 days? the amount of discipline to put in systems and infrastructure and hire the right people is way more daunting than not eating physical or excuse me, hard foods for a 7-day period. Way harder. The first thing you have to master is your discipline. I will go into the full 10 things that you have to master as a trader next week. But the first thing that I need you to master is discipline. So, unless you're diabetic or have any kind of health conditions, please consult your doctor. I'm not one. I do not play one on TV. But you have to. I would argue that you should do a juice fast. And then after the juice fast, you should get in 10 miles every day for a 50-day period. If you don't, or you're not able to do that, you shouldn't trade. You shouldn't trade. I'm going to be honest. But once you know what the lifetime goal is, and then you have the discipline there physically, then you can take on the mental challenges that come with trying to be an investor. Because once again, when you're trying to be a trader, you're competing against the best people on earth to ever invest. There is no biddy ball. There's no AU. You go right to the pros and compete against the best. Is your discipline in order to be able to take the right move at the right time? Like, I've given every rule, every structure, every secret. It's about you applying them. But I'll go into the full 10 next week. I love you guys. Over. There we have it.
Man.
A whole lot, man. A lot of research, man. And I know some people are gonna say, Troy, you forgot to do it. So do your own research. Our content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. This is a message brought to you by the good brothers at Earn Your Leisure and the good brother Ian Dunlap, the master investor himself.
Yes.
Outstanding performance, sir.
Thank you, brother. I appreciate it.
Yeah, man. I was looking at the Dow when you had the top 3 positions, man. I'm like, wow, there goes my portfolio. Over the past 2 weeks, you done gave out my whole portfolio. So
my bad. But the time when you get in, they can't duplicate.
They can't do that. That is a fact. That is a fact.
And you know, it's just about execution. After a while, you gotta, you know, you can watch. What's up? What's going on?
Xander's in the house. What up, Xander?
How's everything?
You're having a blast.
You can watch all the YouTube. You can listen to all the podcasts, but you gotta make the choice to start executing, and that's the most important thing. So hopefully, you guys are you know, getting a lot of value from Market Mondays, but more importantly, hopefully, you guys are executing.
Yeah,
that's important. So I wanted to just go into a couple trending topics if we can.
Yeah.
I posted on Instagram the other day. Dogecoin is something that has been a cultural phenomenon over the past year, and it's falling. And Elon has continued to tweet about it, but his tweets don't seem to be moving it the same way.
Oh,
but
baby.
There's a baby Doge.
Oh, baby.
There's a new Dogecoin.
Baby Doge.
Baby Doge, which is actually doing well. So is Baby Doge the new Doge?
Nope. I haven't said it in a while. I'm gonna take out the is. Doge dead.
Ooh, Doge dead?
Doge.
I said, and everybody killed me.
Yeah.
But I kept telling you guys, like, if one person is going to move the market on it, and I love Elon dearly.
Yeah.
But you guys know it's not a quality. Like, here's the truth. Quality, you don't have to brag about. You never see anybody from Rolls-Royce, BMW coming out and be like, our car is great.
Right.
You know it's great when you see it. McLaren, you never hear the owner be like, we're better than Nissan. If you have to declare that, it's not better. It's not better. Doge is there, and baby Doge is.
I mean, it was interesting. I mean, just the tweet alone. I think he put the Baby Shark tweet out there, and people went crazy on it. But even if you look at Baby Doge, it's tough to even get on a platform to even purchase it. I know some people are like, "Oh my God, I got to find it." That's a journey in itself. People are gonna lose money.
On the show.
They're gonna lose money even trying to get Baby Doge. So be careful, y'all. Be careful, please. I know people are trying to make good trades and
it's a good trade.
They think
not
they're
a good
good
investment.
It's two different things.
Yeah. So.
And no, we're not hating. Yes, we want you to get the
Make
bag.
your money.
You don't want nobody to get the bag but you. Listen, I have invested interest if something is great to tell y'all to get into it early. So in 5 years, if I decide to take over a bank or something, I'll have your votes. This is not the one. It's not the one.
There was big news today, even though the market was closed. There's big news today, July 5th. some of you may be too young to remember, but in 1994, this company called Amazon was founded. And today they have a new CEO by the name of Andy Jassy. And so for most of you, you're like, who's Andy Jassy? He was actually the head of AWS. And so if you know Microsoft, not Microsoft, you know Amazon, that's his cloud service, the biggest cloud service at that. So he is now officially the new CEO of Amazon. So Ian, what are your thoughts? I know what I really want to ask, and I'm thinking, well, Jeff is still going to be on. I think he's going to be the chief board executive.
You're gonna be chairman, yeah.
Split anytime soon? Stock running? What do you think?
Maybe. I mean, if he still has majority vote, no. But if that gets watered down, yes. And I know it's crazy to say because Jeff has been such a great CEO. They may be better without him at being CEO. Because AWS is one of the most dominant forces there
by itself.
By itself. So like with him being out of the shadow, I made the comparison, I think maybe 8 or 12 weeks ago. He is their Tim Cook.
Mm-hmm.
The operation stuff that he may do. And if he improves any of those employee conditions and work conditions, like even 15% over the next 2 or 3 years, and the workplace is happier, it's over with for every other retail chain. Right. Because if you look at Amazon, the only reason people hate them is because of the workplace conditions. Now, you can't get a 92-inch TV shipped to you in 2 days or 1 day at a fair price and have high employee wages. So you guys got to pick. But if he figures out that workplace environment and makes that better, good night to every competitor they have.
I mean, it feels that way now, especially with the way that Amazon comes in and dominates the industry. And we know that they're coming into healthcare, and we know that they're trying to do same day delivery.
Yep.
So, I mean, it's interesting to see. And Jeff Bezos is not going anywhere. His thing was, he's going to focus on new initiatives and new businesses, which is like, that seems scary in itself.
Yeah.
I feel like they've dominated so many areas that are like, all right, well, more of the same is coming. But it'll be interesting to see when we get a new CEO. Like you said, Tim Cook was at Apple, and it's changed the outlook of Apple as far as innovation. And so let's see what Andy can do.
Speaking of long-term hold, all-time return, Amazon 202,000% return.
Those numbers don't even sound real.
But no one wants to hold long-term. Enjoy. I will. When y'all see Xander going to the moon, literally, in like 2031 and all that, that is a cheat code. The longer you hold, the better, especially with quality like that.
Yeah. Another thing I saw today on Instagram, Boyce Watkins had posted a Ford stock is up 140% this year, quietly. So a lot, there's been a lot of talk about American cars and the decline of American cars, and we talk about Tesla a lot, but we don't really talk about Ford. How do we feel about that?
Strong run. That truck's sexy though. I can't lie. If I have to pick between the Cybertruck and the electric Ford, I probably would get the Ford. Now that's probably because I've been in Texas for a while too, but they've been doing a hell of a job. I still don't like them long term. I could argue GM is a hell of a lot better if you're gonna go American in terms of business structure, CEO, innovation. They're a hell of a lot better, but Ford has surprised me at how well they've done this year.
Yeah, you just took the words right out of my mouth. I was actually going to say GM. If you look at their chart over the past year, a year ago was trading at $25. It's now up at 59 and close. Well, as of now, it was at 59. The innovation we already saw with the Hummer's going to come out and look like. I think GM is in prime position.
I mean, so that
to be the American car.
Well, they all have had tremendous runs over the last year. GM,
true, yeah, that's a good point.
They have. I'm just saying, I, in my opinion, if I had to pick between the two, I'm taking GM as the American one.
Why?
I just told you. I see.
I'm stocking, but it's Ford.
I said the stock, but I've seen the innovation in the EV market specifically. Right, we've seen it. We know what they're about to put out. We've seen the product, and so just based on that, right now, I think slight edge. But yeah, Ford has had a great year. I know we used to talk crazy about Ford, and we like, all right,
I still hate Ford overall.
used to talk crazy about it. I want to say your name, Ian, but we used to talk crazy about.
Realize this is New York. In Middle America, there's millions of people that drive Ford
and believe in that, yeah.
And American muscle cars, and this is pickup trucks.
Yeah, they tried to bring the Bronco back. Did you see it?
I didn't see the Bronco.
Yeah, they shouldn't do that. Let that go.
They're bringing it back. They try to bring it back.
They bring back some old memories with it.
Ever since '94,
It was on the run.
They took it out off of production after
Lord.
95. Nobody wanted that one, especially not the white one.
The juice is loose.
But Rashad, what you were doing, asking them why, for those who need to build a thesis, like Rashad, the person to go to, he gonna make you prove your case study.
You gotta
like,
kill a deal. Like you gotta kill a deal. Like you gotta be able to break down everything possible. And that's what they do at hedge funds and stuff like that. So I always just like to play devil's advocate.
You have to.
Because
that's his investment strategy, y'all.
Don't
tell me why. Don't tell me why. Don't tell me why.
Filter through people who actually thought through. So if everybody listening, compare GM and Ford's revenue, earnings over the last 5 years. Like the true test for me for Ford is going to be if they can get out of 2023. Every company is doing well right now because rising tide lifts all boats. Now, if they slow down quantitative easing or rates go up, then we'll be able to see. Ford hasn't had a great CEO since Mullally after 2008. They're doing a great job right now, but I think a lot of the stock is going up as a hedge to them. And it goes back to the Kathy being taken down thing. A lot of the funds, go research which funds are competitors of hers and which ones of those have put money into Ford to offset her being in Tesla. 2 years, we'll see though.
Yeah.
We're going to see.
Yeah.
Yeah. Really quick, Ian, I'm not sure if you turned into the book today, but fun fact, y'all. So the opening month, this is from the Stock Traders Automatic. The opening month, and I know we're in a new month. I know we traded in the new month last week, but tomorrow will be the 6th of the month. So the first month of each quarter, right? So January, April, and July, there's always been the greatest gain in the Dow, the S&P, and the NASDAQ. And so when people are like, when should I get in? Is there a good time to get in? If you look at historically, which 3 months out of the year are the best? It's the first month of each quarter. Now, we're not going to take the fourth quarter because obviously it takes into account the year-end totals of everything and revenue. But the first month of the 3 quarters, January, April, July, greatest gains in the Dow, S&P, and the NASDAQ.
Top of market, back end of market. Same with trading. Best days, Mondays and Fridays. First day of the week, last day of the week, first month. The correlations are simple. Correlations are super simple.
Yeah. Sometimes when you give people too much food to digest, they throw up.
That's true.
That's a fact, though. That's a fact, though.
Because they don't fully appreciate. Because
like even you mentioning that, I would have never talked about that book on air. I'm just be real with you. Y'all can say I'm a hater or whatever y'all want to. I don't give a fuck. But I would have never met for him to mention that. And we make no money off Stock Market Almanac. Go get the book.
You know what happens, Ian? Every time we're outside, we get stopped. And a lot of people talk about how they've learned something that's changed their life. And the next question is like, so is it a good time to get in? Is it a good time to get in? Hey, I'm telling you, the 3 months of historically, what are the best 3 months to get in? We're in it right now, and we just started it. So there goes your answer for the thousands of people who asked that question.
And if you go hold long term anyway, it's always a good time.
Right. It's always going right.
A lot of information. Like I said, I mean, you got to be able to digest that. And what I'm realizing is like a lot of people saying like they don't know where to start. We have so much information. You just got to take your time with it. But it's important not to have information overload. That's extremely important.
You just start hoarding it.
Well, you just can't even process it after a while because it's too much. Like that was a lot of information. This is usually the time where we go to question and answers. But as I just said, sometimes in life, you got to fully appreciate the moment. This is one of those moments. So we're not going to do questions this week.
You got a new gray colorway though?
I know what?
Let me text Mike.
Oh, charcoal.
That's a charcoal gray.
Yeah, charcoal. So this week, we're going to end it a little early to give you guys a full hour that you would have had otherwise to really digest this. And we know it's a holiday, so be with your family, spend time with your family.
I going to go see snow. I'm pulling it off.
Album drops July 9th.
Well, how the album sounding?
July 9th.
Oh man,
that man going to an exclusive record release party.
Speaking of it,
Reed gonna be there.
Shout out to Raekwon also.
That was amazing.
I saw Ray just on. I'm like, is that Raekwon? So I walked out crazy. It's It speaks to the generation. Like nobody even stopped him. He was just walking through.
What?
Yeah, I don't think people even realize who they don't even probably know who he is. Unfortunately.
He's one of the greatest of all time. Him and Ghost underrated.
Yeah, for sure. So when I seen him, I'm like, yo, I got to stop him, man. I'm like, yo, the purple tape, man, changed everything for me. So he's like, real cool dude with his family. So shout out to Ray, man. That was a surprise that wasn't expecting, obviously. But anytime you get a chance to run into a living legend, somebody who we listen to all the time, you should listen to that album every single day. So that really shaped a major part in the culture and in my life. And just had to give him his roses while I could.
Shout out to Mike B. He said he a hometown legend. He said we the Ghost and Ray of finance.
That's hard.
I'll take it.
That's pretty fly. I like that.
I'll take it.
And they don't get enough credit for how they influenced Rockefeller in that sound too. But we had a conversation.
Yeah, shout out to Ray, man. And yeah, so once again, man, we're gonna cut this a little bit shorter than we usually do, but nothing short of information. This was a ton of information, actionable items that you can begin implementing tomorrow as soon as the stock market opens. Do your research, read, share the information, and get in the game. That's the most important thing. I'm hearing a lot of people.
That's all that matters.
They haven't started yet. They've been watching videos. Eventually, you got to start. You got to start somewhere. Whether it's ETF, index fund, whatever you want to do, mutual fund, however you want to get in, just get in. And you learn as you get more comfortable. Tomorrow, once again, is a big day for us. Shout out to Shaquille O'Neal, a living legend and cultural icon. We interview him at 8 o'clock tomorrow. Shout out to Shaq. Yeah. Anything else I'm forgetting?
Yeah, I mean, I know the market is closed today, but crypto is still open. So shout out to everybody that has been paying attention and being wise about their crypto investments. And again, our crypto club will be on Friday, so make sure y'all tune into that, man. And I know it's officially summer, so I know kids are not out in school anymore, but they are in camp. I just want to wish everybody a safe summer. If you're going away to camp or if you're at a camp, be safe. And we want to put prayers of travel on anybody that's leaving their state or the country. I know our brother Wall Street Trap, his birthday was yesterday. Shout out to him. Yeah, he's on his way back stateside. So travel prayers to him and everybody that's traveling throughout the summer with their families, man. Love is love.
All right, Ian, I'll let you finish it.
Love y'all dearly. Now I'm gonna let you go. I'm gonna let you go meet up with Snow real quick. So shout out to everybody. I love y'all dearly. You invest. Well, I asked this: what's the best car you saw at the car show, and what big business lesson did you learn while you guys were there? We can wrap up there.
I think the best car. I mean, of course, 50 Cent's car is really exotic, like the Lamborghini with the Versace wrap. Of course, my man Alex, good energy. He got the Cullinan with the Maybach seats. That's that's heavy in the
high
streets.
level.
Shout out to Alex. Lil Baby had like 10 cars there, so he had some dope cars.
Yeah, I'm gonna put Baby's car Fleet as the best cars that I saw. Yeah, his Cullinan was sick, but our section was dope, man. Our section was dope.
Yeah,
Shout out to Gooch had that gold Lambo out there. Josh,
the gold Lambo,
the orange Lambo.
Josh had the orange Lambo. Like I said, I think out of our section, I think Alex has the best car. No disrespect to any of the other guys, but that Cullinan is tough. So shout out to Alex.
Heavy in the street.
Heavy in the streets. Shooting stars on the inside.
Yeah.
He makes sure as I ride in the car every time I go to
Maybach seats. Maybach seats.
Shout out to Alex, man.
Hey, and shout out to the ladies with Jeeps. That's a crew out there. Ladies with Jeeps. They had like 80 Jeeps.
Yeah, they
pricked out. Tough. Yeah, it was dope, man. It was dope. Yes, Envy put something beautiful together, and the paid in full section was dope.
That's incredible.
Section was dope. What was it? Was it the
BBS boys?
They had the Biggie, the Coogee seats.
That's crazy.
Nah, that was crazy. I don't want to sleep on that.
That was hard.
DJ Thorough.
Yeah,
that's Raekwon DJ actually.
Okay.
And the biggest business lesson I learned, just the power of collaboration and relationships. Envy, somebody that we met through Matt, somebody that I met on Instagram.
I didn't know that. Okay, I thought y'all grew up together.
Nah, I met Matt on Instagram. So Matt, he made that relationship with Envy. Envy has come on Earn Your Leisure. Then he came on Market Mondays. So we did the car show.
We were on the Breakfast Club.
Yeah. I'm sure he'll do something else for us later on. So that's how it works. You support one person, and you don't do it with the intention of asking them for a favor. Like, you know what I'm saying? You just do it out of just love. But that's just how life works. It all comes back. So that's probably the biggest business lesson that I won't say I learned, but just always just
Seeing it
reinforced.
come together.
Yeah,
And
please.
everybody that we had at the car show has been on the show for the most part, or we have relationships with. So, this is just all organic relationships. Everything that we really built at Earn Your Leisure is a relationship, even with Market Mondays,
Yeah.
started with a podcast that we did, and then, led to a show, and this is where we're at now. So, it's just a matter of just, being a good person, looking to help other people, and just keeping good relationships going. And you never know how that can flourish into something else in the future.
That's a fact, man. Relationships will open doors that money can't. Please remember that.
That's real.
Please remember that.
Yeah. The section y'all had was nice, man. I want to give y'all props again, because when I saw it, I was like, man, had a geo there. I'm like, damn, okay. If Xander wasn't snotting and sneezing like crazy, we would have been there. But
Yeah,
you were coughing. What you mean? He had that Mortal Kombat sneeze going 5 feet. I'm like, bruh. So
Shout out to Xander,
no, I
man.
love y'all.
Yeah. And we got something that's going to change the entire culture, the entire
I
world.
wish you could tell him now.
Not yet.
Yo, when you, I'm gonna
top
just tell y'all, when he told me what it was, I was like, bruh, I don't know how you held it in.
But we gonna
soon
shake the room.
Soon come.
We're gonna shake the room.
Soon come.
Execution is key, and being silent. Even with partnership thing, people be thinking short term, and man, if it's not lifetime, not 10 years, like, man, I'll say that. But in terms of the idea and all that, brilliant. I'll say that.
Breaking news alert. Soon come.
I'm excited.
Appreciate it.
I'm sorry I was speaking bad on your name. You were snotting. Not me, you.
Yeah. You smile.
Me.
Yeah, Daddy.
You want to come on real quick?
You want to step?
Yeah, I'm almost done. You want to come say hi?
So, good night.
Come on, come say hi.
Say good night.
Hello.
What's up? What's going on?
Man. All right, love y'all.
All right, y'all. Be good. Be
y'all.
safe.
Bye.
See you guys next week.
Boys.
Later.
All right, y'all.
Love y'all. Peace.